Greetings, good day, good morning, good afternoon, good evening, depending on where you are in the world, ladies and gentlemen. My name is Patrick L. Young. This is my debut LinkedIn live stream, also going over YouTube, the beta edition of In Patrick's Opinion, coming to you over the interweb from Valletta in Malta. Today, we're going to be looking at the topic of fluconomics and much more. What are you thinking about the world after COVID-19? Or indeed, is it still the world during COVID-19? How many waves are there going to be? Well, that's probably one for the epidemiologists, but I'll be sharing my thoughts on how world trade is going and looking at some macroeconomics too. First of all, for those of you who don't know me, permit me to introduce myself. As I say, my name is Patrick L. Young. Way back in the day, good grief, back when, the printed word was the very popular thing, I was actually the author of this tome, Capital Market Revolution. It was the first best-selling book of the fintech era, talking all about many things which now look incredibly obvious to those of us who are living the digital age. However, for those of us who are bald like me, that's born analog and living digitally, things looked a lot different in 1999 when the good folks of the Financial Times published that book. I've been the chief executive of a small stock exchange, this Cybex in Romania, as well as being a derivatives trader, which is where I started out in markets many, many years ago. I'm a lifelong entrepreneur. Formerly, once upon a time, I ran historic car racing back in my native Ireland as well. Therefore, ladies and gentlemen, we're going to get straight into discussing today's meaty, beefy topic. That is the fascinating world of fluconomics. And when we look at fluconomics, it's a very, very interesting and challenging issue because obviously, well, for those of us who were around even 10 years ago, I do believe there was a great article in The Economist which was looking at the very topic of how this whole nature of the flu pandemic was going to be one that could ultimately destabilize not just the health of many people, but also their economies. Let me start with a very, very brief, in this age of litigious world, we always need something that's a little bit of a disclaimer. The trouble with weather forecasting is that it's right too often for us to ignore it and wrong too often for us to rely on it, something I said many years ago, which has made it into more than a few of the internet quotation directories I see these days. So let's start with Emma. Emma was born today in Valletta in Malta. She's going to live to be 130 years old. Everything about the world into which she has been born is changing. It's changing rapidly with, well, something that was completely and utterly impossible to recognize even a few years ago when, say, well, I was born, for starters. To think about it this way, Emma's born into a world where she's going to live to be 130 years old. She's born into a world where, thanks to, therefore, biotechnology, her ability, her scientific makeup is going to be something that will allow her to enjoy incredible health. That said, because of the pension system, she's more than likely going to end up working to be 100 years old and living to be 130, as I mentioned earlier. Her world, which was the realm of science fiction and fantasy when I was a child during the twilight of the last millennium, presents opportunities, threats, and challenges like no other era in human history. It's a world of speed and innovation where a tiny competitive advantage, a few mere microseconds, can give the opportunity to create vast empires. Amidst these incredible opportunities, there are massive chances to cooperate locally, across borders, across continents. There remains huge benefits to being ahead of the competition. But of course, because of these wonderful powers of biotechnology, of which we're on the cusp at the moment of them being unleashed for our economic and health benefit, the diseases which robbed so many of our forefathers of so many children are declining. But for those who prevail and profit, the medieval mantra of victory or death rings much more true than before. When Emma reaches the age of 18, she's probably never going to have a driving license because she'll use a driverless car. She may never even own a car. She'll probably share it to the pool or just rely on casual renting for every journey. That's already a facet of life for hundreds of thousands of people across the world, of course, in, well, amongst other cities, Malta and Valletta, for example. Drone transport is probably going to be a handy way to home head home late of an evening once you've had one too many drinks. Certainly, the autonomous unmanned aerial vehicle is going to become a vital element of infrastructure for Emma as she becomes an adult, whether that's from grocery deliveries to various safety and security applications. Wherever our child looks, whatever they may do, their lives will be surrounded by and dynamically enhanced by technology, from the pyrotechnics bringing ancient relics to life in the world's great museums, to the way our child's recreational affiliations will be divided between conventional games, and of course, that lockdown speciality, esports, something nobody had heard of until just 3, 4, 5 months ago when COVID-19 struck, which is linking players across the world. Therefore, our child of today, Emma, she's habituated to listening and watching on demand in a way where the whole concept of TV channels and a fixed program stack appears as bizarre to her generation as taking a few days riding on stagecoaches has been to ours. More than any generation, Emma is born into a world of pure opportunity. That's pure, unrelenting opportunity at every turn, powered by digital wonderment. Her opportunities include nanotechnology, biotechnology, and of course, the whole world of finance. However, the way that she's going to actually interact with the world of finance is going to be radically different to what we've seen in any previous generation. Take, for example, a bank. Well, for one thing, she actually may never use one. She will have an online experience. She'll online financial management. A lot of it will be powered through blockchains. She'll doubtless hold crypto assets alongside whatever remains of fiat currency by the time she becomes of age to hold money and investments. At the same time, she's going to have thousands of options, all available for semi-instantaneous investment and settlement. This isn't just about the pure technology facing the child. This is also a derivatives world. The child who thinks in 3 dimensions financially will be at a huge advantage to those who are limited to the old analog stock buyer's binary of owning or not owning a share or bond. In that respect, Emma's world is, as I said before, completely unlike anything else that we've ever seen. She's going to be wedded to her digital device because, after all, that's a natural interface that she's going to grow up with, whether it's her mobile phone, her tablet, and indeed, possibly whatever computer she actually uses, but who knows, she may never actually graduate beyond tablets, given the incredible power that they already offer us. Therefore, the child of today is going to be a member of a whole new data-rich generation, Generation Exabyte, developing and deploying at least, well, one with gazillions of zeros after it. That is, of course, what is an exabyte. It's going to be a totally different world. Back to her relationship with money. She's not going to look at physical cash in any way, shape, or form. It'll be a novelty, something which happens around the edges, the fringes of her business. But nonetheless, how she interacts with, say, for example, her old age pension is going to be interesting. Probably that will be why she'll have to work for, say, 80 years until around about the age of 100 in order to simply manage to get the benefits in order to be able to retire. But of course, as she's going to live to be 130, thanks to nanotechnology, biotechnology, and a world which looks a lot more like the Jetsons when I was born, rather than the world into which I was actually born, it's going to be an incredible opportunity. All the while, within the background, her 3D food printer busy working on constructing a few colourful, nutritiously balanced side dishes to go with her dinner. That, ladies and gentlemen, is the stunning and fascinating opportunity that is open to our child who is born today, Emma. And of course, therefore, how she interacts with world trade, with everything else, is going to be quite fascinating, which brings us back with a shuddering halt to the modern world, to how we're looking at the current. Well, what was an economic shock, but no surprise. I doubt anybody really thought that COVID-19, the virus, was going to be suddenly upon us at this point in time. Although, as I said, there have been articles going back many years, and indeed an excellent article about Fluconomics, which was in Reuters nearly a decade ago. Thus, we were in an economic shock, but something that was not a surprise. And if we look at it in one way, I can explain to you why, to me, it is not a surprise that we're currently in recession. Even though I'm completely shocked by lockdown, I still remain in a certain degree of PTSD as a result of that lockdown. It's because of economic cycles. if we think about it, the longest economic cycle in the history of the United States of America, the greatest, most dynamic economy the world has ever seen, took place between March 1991 and March 2001. In the twilight, effectively, of the post-Reagan era, through the era of the Clintonian democracy of the United States of America, there was an expansion which lasted consecutively 120 months, unprecedented in the history of the United States of America, until when the Obama era gave way to the amazing and, very controversial era of President Trump, we saw an expansion which ultimately petered out in February of this year at 128 months. And that's why, ladies and gentlemen, there may have been an economic shock, but it ought not to have come as overly a surprise to us, because certainly when we broke through the 120-month barrier during the course of the middle of last year, it was quite obvious, I felt, that we were going to be heading towards some sort of a recession, even though in no way could we be able to actually follow the idea that it was going to be necessarily a pandemic. So here we are in the era of Fluconomics. The Fluconomics are going to be, well, it's a four-stage process. We have four shocks. The health shock clearly has already been upon us. It is still already with us in many parts of the world, although some parts of the world seem to be moving on from the COVID-19 era. So far, second or third waves, of course, permitting. The health shock of 2020, who knows when that will end? Will it be like SARS in 15, 20 years ago, which suddenly died out, apropos of really nobody's understanding, it just disappeared. Nonetheless, of course, the health shock is giving way to an economic shock, and that economic shock is quite viscerally, catastrophically evident on the streets, whether they're in Valletta or New York or London or any other city in the world, because what we've seen is an absolutely staggering impact upon the economy, and indeed also the first time ever in the history of mankind where every continent has actually been in recession simultaneously. Now, the Fed has this put. The Fed is trying to do something which is to support markets in the United States of America and arguably further afield. And we have all of these quantitative easing dervishes who've been throwing money at markets for the course of the last, 10 or 20 years. We've seen the disappearance of that famous old staple of the economic textbooks, the yield curve, which is now so rare, it's rather like the Loch Ness monster of finance. So few people have actually seen it in living memory. Therefore, I am not convinced that ultimately we can manage to survive the huge economic shock. And let's face it, if you look at the economy of, say, for example, the United Kingdom, it's still down the better part of 25% of GDP as I speak to you this evening. A financial shock is more than likely coming. That's on top of the financial shock that we saw earlier this year, which seems to have been abated by the Fed's put so far. And ultimately, when we work our way through this system, somewhere down the line, I think, ladies and gentlemen, we are inevitably going to see a sovereign debt crisis. Because after all, the economics of Kyrgyzstan, the economics we've seen within, for example, the Eurozone and many other regions, has been simply to keep inflating through debt while trying to avoid actually the consequences thereof. I'm not sure we can manage to support that without there being an ongoing sovereign debt crisis in the future. That said, try not, ladies and gentlemen, to rush towards the Samaritans yet. We have many minutes to go of this presentation and discussion in this live stream via LinkedIn and YouTube, ultimately coming in audio version to a podcast near you, because what we're looking at in this series of events is a very, very challenging time, but one that is going to deliver incredible economic opportunities to us all. Those amazing economic opportunities are going to deliver what is actually going to be a sensational future, and one where, while Emma, between the time she's born and the time she's a toddler, may not be aware of the economic crisis, the health crisis, the financial crisis, or the sovereign debt crisis building around her, she's going to be all too aware as she grows to majority at what is going to be the breathtakingly exciting world of nanotechnology and biotechnology, which lies ahead of us. So, of course, as we're looking at the economy, one of the things we need to peruse is the whole concept of recovery. I think it's fair to say that already in the world of Fluconomics, people have given up trying to price in the idea of this V-shaped recovery. It seems that certainly we went in with an intrepid straight down maneuver that gave us a very, very sharp shock over the course of a couple of months to GDP. But nonetheless, the idea that things are going to bounce out the other side seems to be ebbing away. And that's ebbing away for, well, a couple of very, very simple reasons. One of them is the fact that recommissioning takes time. When you have, for instance, lots of the world's airlines closing down all of their planes, and that means flying them to some suitable faraway airport where they can manage to store them on a private runway, which then gives them a few months of leeway before they bring them back into business. That recommissioning takes time. Heck, just managing to clean your cafe, clean your business before you can reopen the office, that takes time. Recommissioning aircraft, all those sorts of regulated goods that must be kept safely, is going to take a considerably longer time. And indeed, we've already seen the maneuverings of many airlines, such as, for example, British Airways, who are removing from service a vast swathe of their whole fleet. So therefore, farewell to the jumbo jet, unless, of course, you happen to be in the market for taking yourself on a top-tier private jet in the near future, which has had one sympathetic owner in British Airways. We also have this massive zombie company overhang. That's a legacy of quantitative easing to a large degree. Many, many businesses have been hanging on for the course of the last 10 years or so, from the great crash of 2008 and the recession that followed, in the hope that they're going to manage to somehow or other find a business model that allows them to survive. It looks, ladies and gentlemen, as if that's just not going to happen. Therefore, there is going to have to be a liquidation of many of those zombie companies. Moreoverly, there is this incredible worry that the fact that, well, for instance, the Eurozone, they already have a word, one single word for zombie company. They call them banks. Equally, there's the whole extent of administrative and outright bankruptcy. Those companies that are currently going through administrative or bankruptcy processes. One which is not on this slide is, of course, Cirque du Soleil, the incredible purveyors of amazing, wonderful, incredible pyrotechnics. But unfortunately, they couldn't seem to manage to survive without this safety net of a balance sheet, as indeed no company can. Thus, we have the decease of, or at least the administrative death so far. Will they be rescued? Things remain to be seen. Of the likes of Brooke Brothers, J.C. Penney, the department stores who lost 95,000 people are on their payroll. All those jobs are at risk. And also in fashion, J. Crew, as well as the department store Neiman Marcus. It's not just those sorts of businesses, of course, although I hasten to add that there's also Mucci in the USA who are currently in administration as well. We've seen catastrophically the airlines, which I mentioned earlier, and indeed at the moment, what are we looking at in the USA? I mean, typically during the course of recessions, Chapter 11 airlines have been the most active airline in the United States' airspace. These days, well, we've already seen the de facto nationalization of El Al of Israel. We're seeing the de facto nationalization of Ghanaian Airways. We're seeing some similar process with the German government taking a 20% stake or more in Lufthansa in order to keep those airlines flying. This is something that's impacting the entirety of the economy. And in fact, it's fascinating to see that not only has it killed cinemas, and indeed I'm sure there will be many hotels and other HoReCa businesses which are going to further suffer in the months to come, with many already in administrative bankruptcy, but we're looking at the likes of the offshore drilling platforms, Diamond Offshore Drilling, and Whiting Petroleum, a shale pioneer, who've all suffered from the collapse in energy prices. In other words, this is across every kind of sector of the economy, as we're suffering from all manner of economic malaise caused by the lockdown itself. And indeed, nowhere is that more obvious than in delinquency rates by property type. In this particular chart, which I found from the good folks of Trap, really interesting. I mean, we don't need to look at the actual numbers. All you have to look at is that in April 2020, you suddenly see straight up movements in delinquency. And we're hearing statistics in the USA of easily 30 or 40% of tenants in many regions are having problems paying their rent. That's a terrible situation to be in, and certainly not one that encourages us in the background of world trade, or indeed the recovery of the economy is going to be a very, very rapid thing. Thus, we have a huge problem for the economy in order to come back. One of the other issues is going to be how willing people are actually to get out and spend, and indeed how soon people will forget about past the epidemic. How soon people are going to forget about the epidemic of recent times. And we can benchmark that, of course. We can benchmark that against past epidemics. 1919, the Spanish flu, which suddenly has become something that everybody's talking about, but actually I don't think barely anybody remembered until relatively recently. However, what is interesting is, and this perhaps plays along with a theme contrary to what many are saying in the news media at the moment, where people are saying it's going to be years, decades before people will get back to normal. And they're using the example of how people who were scarred by the Great Depression generation really never got back into the way of spending with gusto after the hardship that they had managed to undergo during those era. But you see, we have the epidemics of 1968. Now, 1968, barely anybody remembers that flu bug, and that was actually a bug that came from Hong Kong or China, there or thereabouts. It killed 2 or 3 million people around the world. It killed many people in the United States of America. And yet, when we look back to the history books, what do people remember about 1968? They probably remember, well, Woodstock, or the antics of Daniel Cohn-Bendit and all of the people who were rioting on the streets of Paris, amongst other places, and similarly, the Czech Spring et al. Those are the things people remember from 1968 these days. Barely anybody seems to be recollecting the huge pandemic that took place in flu at that point in time, let alone the pandemic that took place barely 11 years before in 1957, which equally killed a great many people. So therefore, there may be cause for optimism, because the ability of the human mind to forget rapidly the pain that it has gone through recently may not actually mean that it's going to be that long before people will go out and start spending money again. However, right now, the bold statistics that we're seeing are things like in the United States of America, something like 50% of consumers considering buying a new car have decided to postpone the purchase. That's bad news for Detroit and bad news for the rest of the world's manufacturers. Now, the presentation today, I actually gave earlier a shortened version of this to the worshipful company of World Traders in the City of London, of which I'm a liveryman, earlier today. And I think it's interesting to take a step back at the moment when we're looking at the COVID recovery against the background of, well, the history of capitalism itself. And if you look at this chart, I mean, it's very easy. You have an incredibly flat line for global GDP per capita in dollars since 10,000 BC. And actually nothing really takes off until we get somewhere past 1750, the point at which the Industrial Revolution really starts taking off, and therefore people start getting multiple commoditized goods, which improve standards of living, which cause more people to come out of farmland and therefore earn greater wages by working in the factories and so on. And that causes us to go into an incredible ascent of prosperity in the subsequent 250 or so years. Now that is, I think, a most fascinating chart altogether, but it's built, if you think about it, on an interesting basis of world trade, because actually international trade, world trade, predates the start of industrial capitalism in 1750 by several centuries. If we look at this chart, that's trade routes of the 11th and 12th century. We don't need to be able to see every tiny city that's on the map, and many of them have even disappeared, those cities, since the time that this map would have originally been in its heyday. But nonetheless, we can see the fixed nuggets, the key points that were the trade routes of the 11th and 12th century. The difficulty, of course, being we didn't have industrial capitalism in order to produce commoditized goods in mass production. And therefore, that meant that, for example, on the trade route between, say, Beirut in the Lebanon and Malta, a route which has been around for many, many thousands of years, it was relatively small volume that could be transacted. At the same time, today, obviously we have, I would say, three kinds of key trade route. The first is obviously the physical trade route, and the physical trade routes we've seen suffered an incredible decline in trade during the early part of this year. If we look at, for example, air transport, which is obviously very vital for a vast number of products, particularly those with very, very high values, well, even the business of gold effectively ran into huge problems because guess what? Not a lot of people who mine gold are really that comfortable about sticking the concomitant product onto bulk carrier ships and therefore managing to come back and deliver something which they want to put on the ways of the great highways and seaways, because clearly there is always the risk of piracy. Have you been at risk of piracy recently, ladies and gentlemen? Do send us an email and ask or make a comment. In fact, I welcome all your comments and feedback. This is the first show in this series. It's going to be all about me, at least all me presenting. And I'd really, really like to hear more from you, ladies and gentlemen, about what you'd like to see on this show. And indeed, who would you like to see as guests? Would you like to be a guest? Have you got something to say about the world of finance, markets, trades, fintech, entrepreneurship, anything to do with the interesting and exciting world of business and delivering economic growth? I'd love to hear from you. Nominate somebody who you think is a great speaker who would make an interesting guest. It would be super to hear from you, and we will welcome you on to a subsequent edition of IPO Live. Likewise, feel free to comment on the content that's in this presentation today and interact with us. I'm on LinkedIn, Patrick L. Young, and you can also do so in various, I think, funky sidebars and social media as you're watching this live stream. Now, back to those digital trade routes, what we've got here on this particular chart is actually the interweb. It's the undersea cables showing around the world. And of course, what we can see is the incredible interconnectedness between Europe and the United States of America, the epicenter of the internet itself, and a much, much lesser interconnection with several continents, particularly, it has to be said, per head of population, Africa looking appallingly starved of bandwidth pro rata. Are they ultimately going to have to find a new trade route which involves a great deal more use of, say, the wireless telephony, as they are already doing across some of the great land masses, where you see digital transactions via mobile telephony being the way that people have chosen to go, rather than even trying to use fixed cable connections. So we have the whole area of fixed physical trade routes by sea, by air, by road. All of those folded incredibly flat during the course of the early part of the COVID crisis, during the lockdown period. And that's how, of course, we saw something like 95% collapses in passenger flights in many regions during these times. Catastrophic, and again, difficult to manage to re-energize that business, to manage to get it going. However, through digital trade routes, we have, of course, seen unprecedented abilities to continue trading, to which end, and I speak here as the person who publishes the daily newsletter of the Bourse Business Exchange Invest, I'm incredibly proud and excited at the way that the exchange industry coped so unbelievably well with the amazing volumes that took place in the early days of lockdown. And indeed, when you think about it, there were men and women who were sitting at home with their families or their cats and dogs, and they were managing to operate IPOs on the stock exchanges of NASDAQ and the New York Stock Exchange and around the world during the time when the rest of the population were all sitting at home, barely unable to manage to go out to even do the simplest of daily shopping under lockdown. That was incredible. And of course, through these networks, through these incredible cables that we see here, there were just unbelievable traffic and messaging. What was it? 80 billion messages or something like that was going through the NASDAQ stock market in New York in a day. Quite sensational, unprecedented. So the digital trade routes, they're working well, but obviously there's still a problem with economic recovery in order to manage to deliver the actual physical goods that we're ordering. At the same time, one other trade route that has been functioning incredibly well, which is the backbone of our society and which has ensured that, if nothing else, civilization managed to take over, is energy. Now, I've taken this diagram. It's slightly more aged. It's a pictorial representation of European energy from a few months back, and it's showing all the oil, energy, gas pipelines and interconnectors. The reason this is interesting, of course, is because one of the biggest things that's happened in the course of the last 20, 30 years of world trade has been the increasing realization that you might be generating electricity within your own country, but actually it's a great idea to sell your excess to the people in the neighboring nations. And of course, the reason this works so well in terms of energy interconnectors in, say, Europe is because of the relatively small size of the countries. So therefore, I think the number is that electricity can travel roughly about 1,500 kilometers before it starts to actually lose power itself. Now, if you use a ruler and draw 1,500 kilometers between any area of the north, south, east, or western land masses of Europe, you can manage to cover at least 3 or 4 borders. In some cases, you can actually manage to get 12 or 13 as you go around in a radius, if not more. And thus, that's been very, very vitally important, because that keeps the trade route humming of electricity, which is absolutely still a lifeblood of our society, as has been the growth in the gas and oil pipelines during the course of recent times, which have helped make sure that during lockdown, we at least had the energy to power our homes, to cook, to do everything that was required in order to manage to stay alive, even if the actual physical trade routes beyond the energy trade route and beyond the digital trade route weren't functioning particularly well. And thus also we can see that represented here between oil and gas wells and oil and gas pipelines, where you see the amazing ways that they interconnect around the world from the sort of places that are full of oil, whether it be in the Urals or in the middle of the United States of America, particularly thanks to shale gas, or indeed the Middle East, etc. So that leaves us with a series of points to ponder. And by the way, ladies and gentlemen, once again, on these points to ponder, do you agree? Do you disagree? Have you got any comments or feedback? What would you like to learn more about in the world of markets, finance, investment, entrepreneurship? We're here to talk about it on this IPO video live stream during the course of every week from now on. And indeed, as I said earlier, whichever guests you may choose to try and bring to the show. However, one point I think that we really have to ponder, and indeed what exemplifies that more clearly than this actual live stream itself, which you're either picking up live on YouTube or LinkedIn, or indeed possibly in a delayed format recorded on YouTube or some other video sharing site, or possibly also subsequently by podcast in due course. That is how digital innovation by stealth has been one of the watchwords of the COVID-19 lockdown era. After all, for many years, we were used to the nature of science fiction being the concept that people could have telephones on the end of their wrists, which would allow them to actually see the person they were talking to. Nowadays, of course, we call it a Zoom call, and they seem to be the bane of our lives. Or indeed, as a Spectator cartoon noted recently, quite oppositely, there were 2 pussycats sitting in the back garden, one talking to the other, one looking towards the man in the room behind him, who was obviously studiously working at his laptop, and the first cat said, "I've got to go now, I've got a Zoom call to interrupt at 2 o'clock. So therefore, digital innovation by stealth is something that's really accelerated and is going to continue to accelerate during the course of the COVID and post-COVID era, even presuming that the illness itself disappears. And I want to think about some areas in which that's changing at the moment. If we look at, well, for example, shopping malls in Hong Kong, or we look at actually reception desks in many parts, particularly in China and Southeast Asia already, there has been a huge move already towards robots. We're moving towards robots that can talk to you and effectively you can interact with, although I do hear that sometimes their AI is not so good with accents, and indeed some of them can't quite manage to get my Northern Irish patter off very, very easily, it has to be said, but nonetheless, it's early days. However, robots are appearing. Why are robots useful in these positions? Because it's a job where there can be a great deal of information flow, which can be processed relatively simply by a robot. And moreover, the robot is not susceptible to the germs that we might be carrying of COVID-19 or anything else. Equally, therefore, we're getting a huge amount of cleaning and clearing taking place by digitized robot entities. Those digitized robot entities are obviously creating a huge problem for us going forward, because that's vastly reducing the number of people that we need for these sorts of jobs. And that's obviously going to be a crisis going forward, which government really needs to think about how it's going to manage to cope with the whole process of dealing with a huge class of people who are losing their jobs to technology. And by the way, that digital innovation may also be hitting things that involve more middle-class professional lives as well. The simple process of, say, conveyancing, or to some degree auditing and accounting, can all be automated to some degree, which I think is going to wreak some degree of havoc with the employment prospects of many people who previously thought they had a cushy job for life. Therefore, we're seeing incredible digital innovation by stealth taking place at the moment. As I mentioned earlier, economic recovery times are really going to be key to how juicy, exciting and interesting and how soon the wonderful world of nanotechnology really takes over as we await that wonderful and very, very glistening promised land. There is going to be some time while the economy is needing to get its act together, and we're going to have to get through a huge debt mountain that's taken place. There are also a lot of political upheaval issues. I don't just mean the macro trade issues that we've been seeing between certain superpowers and quasi-superpowers in the course of recent times. There are also questions being raised about some of the elections, for example, that have taken place recently in the Balkans. There are many factors which may cause political upheaval, and clearly, given the fact that government remains, just as it was in ancient Rome, to some degree or another, an issue of panem circenses, plus jobs these days, I suppose one might add, that's going to be a big problem when you've already got a vastly high unemployment rate caused by lockdown. We've also got this interesting prospect of the reshoring risk, the reshoring threat to trade routes, where a lot of people have been saying, well, we should be making our own PPE. We should be looking at having all of these sorts of things we need to protect ourselves built locally. Yes and no. There was a very good article actually in the South China Morning Post recently pointing out the fact that Western countries with much, much higher production costs could rue the idea of suddenly pulling back lots of production to their local bases simply because it would unleash potentially massive inflation. Inflation, for those of you who don't remember it, was something that used to be really, really a bane of the political lives of many, many countries the world over, until, of course, we invented quantitative easing and central bankers were all rendered to be genius. Again, that era might be coming to an end. One other thing that, of course, is interesting about these reshoring threats are there may be other ways in order to manage to work around it. I'm going to talk a little bit about exchanges later in one particular segment when I'm looking to the glorious future ahead. But take into account one thing which has been little recorded in the media so far. In the UK, a group of folks who do a lot of work for different government entities built an internet-based simple B2B e-commerce platform, an exchange. They called it the PPE exchange. And the whole idea of that was to try and help address a crippling imbalance where, at the height of lockdown, the United Kingdom seemed to have an unbelievable shortage of PPE equipment. Actually, within days of starting that exchange structure, we suddenly got to the point where there was a balance across all the different areas of PPE equipment that was required. Moreover, actually, a few weeks on, we've ended up with a massive imbalance, a supply surfeit of equipment that has been available, and thus we have helped to cure one of the fundamental problems of lockdown, and that may also be something that could use to address this reshoring risk. And ladies and gentlemen, I left you to contemplate that slide for just a moment because I think it's very interesting to see the fact that a lot of us have become quite used to the idea of change in many ways. We change our mobile phones every year, but at the same time, we don't realize that really the only certainty in a digital age in life and investment is change. And that's something we have to bear in mind throughout the course of time going forward. At the same time, there's no greater power than an idea whose time has come. And that allows me to be slightly more optimistic in this segment of the discussion because, well, here we have a picture of a car. It's a car called the Loaner Porsche. It's the Tesla of the late 19th century. The thing was, at that point in time, the internal combustion engine was effectively a much more effective means of delivering cost-effective automotive transport. Thus, the genius gentleman who you can see sitting here in the front seats, one of them is none other than a man called Ferdinand Porsche, the man who to this day has one of the most famous sports car company franchises named after him. These days, Tesla are on the verge of re-entering, or entering rather, the S&P 500 blue chip index of the US's 500 top stocks as a result of the power of the idea of electric cars and how that's really moving forward. But at the same time, what's interesting to look at here from the perspective of the Porsche company, which Ferdinand Porsche would found many years later into his career, is the fact that using new technology, and this to some degree possibly also affects the reshoring argument that we were talking about earlier, Porsche are now using the additive productive technology of 3D printing to make even items such as the pistons for their Porsche 911 GT2 car. Now that's a phenomenally aggressive performance vehicle. It's essentially a racing car for the road, and there are a great many of them which are used for racing too. 3D printing is allowing them to build a lighter, more efficient, more sturdy product than they could do from the old style production method of taking a large lump of metal and reducing it to the shape that they wanted to have. This becomes very important because, again, going back to the idea of reshoring and so on, where Porsche have been using 3D printing for a lot of the creation of heritage parts for their older cars, they're now using it in their new cars, and it's not beyond the bounds of possibility that in the near future we're going to see a lot more micro factories producing componentry such as this on demand for these sorts of manufacturers, so they can supply the components much closer at hand to the people who are actually driving the Porsches in, whether it's the country of Thailand or Albania or wherever. And indeed, of course, we can already see that in the sort of interesting patterns there are to the production of things like perfume, for example. When you buy that lovely French perfume or aftershave in, say, the duty free at Singapore, you might be surprised to know it wasn't produced in France. It was more than likely produced at a factory somewhere relatively close by, probably in neighboring Malaysia or perhaps in Vietnam, somewhere around there. It was all built exactingly to the perfect specification as designed by the great perfumiers, the noses of Switzerland and Grasse and all of the other great perfume making centers, but nonetheless, it was locally produced. That, of course, has a lot of ramifications also for our economy when we're looking at the concept of producing goods in a way which lowers the carbon footprint of pure physical delivery. Of course, at this point, I have to always mention something which impacts certainly on the financial world, and that is disintermediation. And disintermediation is, I think, an absolutely fascinating concept. It's the removal of the middleman in a transactional unit. And undoubtedly, our digital age means that we are going to see some form of greater disintermediation. In the course of the previous example, of course, it may well be the people who previously imported and stocked thousands of automobile parts into obscure parts of the world waiting for people to require Porsche spares. It could also be someone who was previously in the food chain of importing perfume, as an example. Thank you, by the way, very much for all the comments I'm having already. It's lovely. Universally positive so far, which is absolutely magnificent. Really appreciate your kind remarks. Thank you very much, ladies and gentlemen. Feel free to log in and send me a message. Tell me what you like or don't like about what we're doing with this and what you'd like us to cover in the near future. Of course, as we move to the high street in the whole COVID-19 era, that has led us to something which I have been talking about in other presentations for some years. We have gone, or we've reached or gone beyond the point of peak mobile phone shop. We've equally gone past the point of peak bank branch. Now that has a pretty catastrophic effect on the overall nature of the high street itself, which is clearly going to need to have some sort of treatment, particularly in the era where a lot of people are used to mail ordering just about all of their products these days anyway, and enjoying home delivery to a size and scale that hasn't been common since effectively the Victorian era, before there really was a massive high street department store business, or at least it was only nascent. And as you can see here, I mean, this is a diagram that dates back to 2014, but COVID-19 has only accelerated this process. It's the decline of the American bank branch in this case versus the penetration of the mobile phone. You know, that mobile phone, that thing that you use for Facebook, for social media, for banking, for actually everything, probably even engaging into Zoom calls. But ultimately, also, occasionally, people can even ring you up on it because it's got a telephone built in, the wonders of technology. Well, what we're seeing during the course of this current era is lockdown is pushing the closure of the bank branch, and that's pushing us more and more into a digital world. That has a huge ramification, quite obviously, for what is the high street, because let's face it, a lot of the high street has traditionally relied upon footfall. Footfall is therefore driven by where people want to go on the high street, and traditionally two places that have been vital points for people to stop at in the course of the last 20 years, the mobile phone shop, and of course, that hardy perennial of the last century, the bank branch. If those go away, that changes the whole nature of footfall. It changes the whole nature of how you can rent a property, and indeed also the mass of the mall and every other type of retail property. But you know, ladies and gentlemen, what I want you to go away with today is not the worry about the crisis of COVID. There are really, truly difficult times ahead. I'm not going to make it easy or soft soap it, but I want you to look at this roll of dollar bills. This is a world of opportunity, ladies and gentlemen. We are coming into an incredible era where the Fluconomic megatrend is the digitization of just about everything. And to that degree, we can look at just about every vestige of our life, and like me, you may well be someone who is what I call the bold generation. We were born analog, we live digitally. It's got nothing to do with actually how many hairs we do or don't have on our head. But whether we're a member of the bold generation or whether indeed we're alongside Emma, and therefore born today or born into an entirely digital world where we're going to be native users of tablet technology, mobile phone technology, and so on, we are in an era of unprecedented digitization. And of course, through startups that I've been involved with over many years, and hello to the members of the Mission to Run startup group, which we created alongside myself and my wife and a good friend of ours, Maciej Mikulski, some years ago in Torun, the birthplace of Copernicus in Poland. Lots of us have been, who are watching today, to different startup conventions. And one of the things that drives me mad about startup conventions is this whole concept of people who jump up and say, oh, do you know what's incredible about Uber? Uber don't own a single taxi cab. And I mean, good grief, Airbnb, they don't own a single hotel room. They don't even own a single apartment that they're trying to let out. And isn't that an amazing model? Well, you see, ladies and gentlemen, what I want to give you this evening, because there are so many opportunities, I could be here for hours and hours and hours and hours. I want to give you one coherent example of an opportunity, and it's an opportunity that is built upon one of the oldest business models in the world, if not arguably the oldest business model in the world. It's a business model that would actually have been easily recognized 2,000 years ago in ancient Rome. People were understanding the business of the agora, the centralized marketplace to what went on. Indeed, the Phoenicians had similar sorts of exchanges 2,000 years even before that. And that, ladies and gentlemen, is the whole concept of the bourse, the stock exchange, the commodity exchange, or whatever you want to call it. And that's essentially what, let's face it, Uber is. It's a stock exchange of its own kind, an electronic platform for the delivery of taxi rides. Airbnb, a fast track to managing to match people who've got an inventory of hotel rooms or places to stay with people who are looking to have either a staycation or some degree of more exciting and exotic travel. And the thing about that is it's incredible because exchanges are genuinely at the epicenter of commerce these days. They are a core model for e-commerce. As I mentioned earlier, I'm originally, well, a CEO of a small exchange out in Romania and also a small platform in Australia at one point in time. And I've been very, very rooted in this exchange business. But it's important to understand because digitization, the world post-Fluconomics, is not one where suddenly we all have to find some whizzy new digital business model in order to prosper. Actually, some of the greatest business models known to man or beast are going to continue to be wonderfully useful, even those that have been around for 2 millennia and longer, such as exchanges, because of course, in the less regulated world of e-commerce platforms, we have the likes of the Titan Alibaba of China, who are, well, in the fintech world about to have an offering for their Ant financial technology subsidiary, which they're looking to value at $200 billion, which is, I think, in anybody's money today, rather a good market capitalization, even in these incredibly go-go times for the NASDAQ and the New York Stock Exchange. Thus, we have this fascinating interaction between the old scale models, and indeed, one of the things that's fascinating about the old model of the stock exchanges is how originally it took us as long as 10 days to settle a stock trading transaction. Why? Because actually that transaction could start by taking place in Amsterdam, but require someone to deliver an exchange certificate, a certificate of the stock, to London, which involved a man jumping on a horse, quickly getting to the coast. That was the DHL of the day. He would therefore board some very interesting, nice rigger or other equivalent boat. He would get to the coast of the UK. He would again jump on a horse, which had been provided for him. He would ride all the way into the city of London and appear on the bottom right-hand corner of this diagram at the building that was famed for being the Royal Exchange, founded by Sir Thomas Gresham all those centuries ago, and an original haven for the transactions of stocks and bonds in the city of London. Of course, nowadays, we're used to the idea that stock and bond transactions can take place in a fraction of a second, infinitesimally, speedily, and with also the possibility in some places to make for very, very rapid settlement indeed. So, ladies and gentlemen, automation affects everything. That's what I want to leave you with as the last thought of this whole presentation. What we're looking at right now, these curious doggies, they're lacking their pom-poms, but these, in an age of social distancing, are the Fukuoka baseball team's new set of cheerleaders. They're not allowed to have humans within the stadium while the teams are playing in the Japanese league. So SoftBank, the sponsors of the team, they brought along these fascinating doggy robots. The doggy robots shout, cheer, and move according to the activity on the pitch, trying to make sure that the players are yet more motivated as things go on. So therefore, whether it's the automation of cleaners, whether it's the automation of the receptionists, whether it's even the possibility that, admittedly shorn of their pom-poms, cheerleaders may be replaced by AI bot technology in the near future, automation is changing everything in the COVID-19 era. And that means that the next 3 to 8 years are going to represent a massive world trade upheaval. It is not, however, too late to change. Even if you were not prepared for the start of COVID-19, even at the moment, if you're sitting there and having to take some degree of financing from the government going forward in order to keep your business alive, if you must pivot now. You've got to pivot to survive your business if you are in difficulties, because the opportunities coming up are simply too enormous to manage to miss out on. And you don't want to be in the business of trying to hang together a zombie business for the course of the next 5 or 6 years when you want to be out there having the opportunity to profit from these new businesses. At the same time, to those of you entrepreneurs who have been able to pivot or have been able to hold your business together through alternative means, I salute you. I think of someone who's just round the corner, in fact, in Valletta. They've had perhaps one of the greatest roller coasters of the year. There's a magnificent restaurant. I thoroughly recommend it. It's called Noni. Now, Noni's chef reached the emotional high point, the ultimate accolade of his career, because in the end of February, he was awarded a Michelin star. The Guide Michelin, the ultimate guide to degustation around the world, came to Malta last year. They tested a series of restaurants. 3 restaurants, each received a Michelin star. In the case of Noni, like the others, what happened? Within 2 weeks of our applauding them and celebrating their wonderful achievement, this pinnacle of their career, and at that point in time, ladies and gentlemen, you could hear the throbbing of the cables of the interweb, the pinging of the email as people were filling their order book for months to come. But of course, what happened? Within 2 weeks, lockdown. They were closed. Suddenly, the business went from totally on a path to amazing profit thanks to the investment in culinary excellence to hanging by a thread. And what did they do? Well, for 6-8 weeks during lockdown, they reinvented themselves as a takeaway, and a magnificent, incredible quality takeaway it was. There are many other stories of restaurants that have done that. In fact, I was talking recently to the fantastic Futurist podcast out of Singapore, which was a wonderful opportunity to hear how Raffles Hotel had been doing very, very similar things in the city-state over there. Those sorts of pivots are great. You need to pivot right now, ladies and gentlemen, because I want you to succeed. I want you to prosper in your business. And we want this live stream to be able to bring you some insights that can help your business, help your investment, help you in finance in any which way possible. And that's why I'd really like you to make some suggestions. Who would you like to see interviewed? What topics would you like to see us covering during the course of future episodes of this weekly series? Thank you very, very much, Dominic Raz. I really, really appreciate your feedback. It's a delight to hear from you, David Hardy. All the many other people that have already been sending us emails, thank you so much. It's super to hear from you. Really, really good to get some feedback. What can we do better? What's going to be the future of this world? Because truly, ladies and gentlemen, this is the way we're going to be benchmarking and indeed networking for a long time to come. The age of the electronic televised phone call is upon us. It's here. It's the live stream, and it's the opportunity to have IPO live week in, week out while the NASDAQ is at peaks. And who knows, will it go to many more peaks, or will it ultimately end up that we'll see the Dow Jones index in troughs in the near future? I can't tell you exactly what that's going to be, but I can certainly think of a few guests that we can bring on to manage to talk about those sorts of topics. There are so many interesting matters of the moment out there. It would be great to talk about. Things like the fiasco of Wirecard on the day when, indeed, today, I believe the CEO has been arrested a second time for some sort of fraudulent activity. Although, of course, that calls into question just what were the German regulators doing for the course of the last 2 years? Well, the answer is seemingly beating up the short sellers rather than actually trying to go after the rumors that there were some strange anomalies within the accounts of that particular business. Equally, across the world of trading and accounting and finance and everything that there is to do with investment, we're here to talk about those matters live, and I will be delighted to interact with you. If you'd like to support and you think that this has been fairly worthwhile, why don't you go home with a bit of reading? Take home a copy. It's available now on Amazon and in other good bookstores, published by DV Books. Victory or Death, my new tome, devoted to the world of blockchain, cryptocurrency, the fintech world, talking about how distributed ledger impacts you. This is a book that ultimately is trying to give you an understanding, because the one thing that's going to happen in our careers is the idea we're going to get a job for life. I mean, good grief, that just looks so passé these days, doesn't it? And really, we've got to fill in with, well, look at Nietzsche. I mean, he only wrote philosophy for 20 years, and yet he lived well beyond 70 years and 10. And that's what we remember his niche career success as having been so many years later. What I want to do with Victory or Death is try to explain to you some of those megatrends, the megatrends of finances that are coming through. And actually, we're going to examine some of those on this live stream in the future as they come along. It will be a great opportunity to talk to you again. Indeed, the next series of these live streams are going to come out at the same time. So that's going to be 6 p.m. London time, 1 p.m. New York time next week, 10 a.m. if you're on the Pacific Coast. Email me. Tell me what you'd like to hear. My name is Patrick L. Young. It has been a pleasure to be with you today for this first opportunity that we could talk about the world of finance and markets. We could briefly talk about Wirecard. We could give you some interaction about this whole amazing concept of Fluconomics. I could therefore hopefully give you some insights into the trade routes of the world, whether they're the digital trade routes, whether it's the trade route in fiber, therefore, that's delivering the internet to us, whether it's the energy trading routes, or indeed the physical trading routes, which are taking so long to manage to come together to this day, but nonetheless are still humming, just as the transshipment oil port of Malta exists barely 10 miles from where I'm speaking to you today, breaking bulk, enabling oil to be sent to the much, much lower shelf in smaller carriers on the North African coast, for example. Ladies and gentlemen, my name is Patrick L. Young. I've been with you for pretty much the better part of an hour today. I want you to succeed. I want to thank my production team, Bata Trachikowska, Ola, Kouzhna, and everybody who's assisted with behind the scenes in this first episode of the IPO-VID live stream. As I said, my name is Patrick L. Young. I'm going to be back next week, 1 p.m. New York time, 10 a.m. Pacific Coast time, 6 p.m. London time, 7 p.m. in Valletta and across Central European time all the way to South Africa. Wishing you a great week in life and markets. Thank you for listening to episode 1 of IPO-VID. This has been the Fluconomics edition with myself, Patrick L. Young. Have a great week in life and markets.